For the last 10 years, Shopify has been the tech darling of Canada. Today, I want to talk about why Tenet could be the next Shopify. I'll do some financial comparisons and talk about why I think Tenet can be on a similar growth trajectory. I've been an investor in Tenet since 2015, and I've had the pleasure of seeing it grow to its current size, making it one of the largest tech companies on the CSE today. This is something I've been thinking about for a while, and I'm extremely bullish on the company, especially after its last earnings. So full disclaimer, this is not investment advice. This video is for educational and entertainment purposes only. The company has built up to where it is today through hard work, determination, and vision. Together, JJ and Golden are building what I think could be the next large growth story coming out of Canada and about to be a global powerhouse over the next few years. So here it is, Tenet Fintech versus Shopify. Can Tenet become the next Canadian growth story? Now I know what everyone's thinking. Shopify and Tenet are two totally separate companies in two totally separate sectors, and I know, I agree with you. This is not an apples to apples comparison. This is an apples to orange comparison. This is talking about a growth story and in no way represents a true value of what Tenet Fintech is or should be in comparison to Shopify, but more of a thought experiment and a discussion about what if. So I spent some time going back and looking at Shopify because I always thought it was interesting about how the market felt about the stock. A lot of people have loved the company, love the stock. It's an amazing growth story, especially being from Canada. And, the road has never been smooth for any company getting to where they are today. I had to look at a few metrics. One was revenue, and the other was EBITDA specifically. Mostly in regards to a lot of the discussion that I've seen out there today is about how Tenet slash their EBITDA projections, and maybe it's not worth what it was before or what it should be because their guidance has been revised, showing a much lower EBITDA number, which is why I thought Shopify would be an interesting comparison. So, as two Canadian companies, at one point, Shopify had 123 million trailing 12-month revenues. At that time, it was Q1 of 2015. It took them 5 years to reach 1.578 billion in revenue. During this entire time, Shopify was never EBITDA positive. Not once, not one quarter, not ever. In Q1 of 2015, they made 37 million in revenue. It took them until Q4 of 2019 to make 470 million in revenue. And they averaged 100% revenue growth in 2015 through to about halfway through 2016 when it started to decelerate and declined steadily to 46% in 2020. The reason I bring this up is Tenet numbers are very close to these right now. Last year, Tenet made 104 million in revenue. If you add up the last 4 quarters, they've almost gotten to 120 million in revenue. Their last quarter was almost 35 million in revenue. Numbers very, very close to Shopify in Q1 of 2015. This year, they're projecting to do 210 million in revenue. This is the revised guidance they gave out that a lot of people are upset about. And it just goes to show that they are still going to be growing revenues 100% year over year. And based on their guidance of 500 plus the next year and a billion the year after, they still plan on growing their revenues by 100% for the years to come, very much like Shopify did. Now, the difference between Shopify and Tenet, they're actually projecting that they plan to be EBITDA positive this year, next year, and the year after. Shopify wasn't. Shopify ran negative for 5 years straight until the COVID pandemic hit. And then their revenue shot up, including their earnings. So really, it wasn't until COVID and the global pandemic that everybody moved inside and e-commerce exploded that Shopify was actually able to become profitable. Now, they might have become profitable anyways, regardless of COVID or not. Even companies like Apple and Google spend a lot of money reinvesting back into their business. That's how you become multi-billion-dollar enterprises. Not by getting to $30-40 million a quarter in revenue and then focusing on increasing our margins and becoming EBITDA positive and trying to return value to shareholders in the form of buybacks or dividends that people seem to be focused on in the community. And this isn't everybody, this is certain vocal members that I see here and there on the various boards and feeds that I look at. But companies like Shopify, Apple, Google, Amazon, they all knew the value of driving that revenue growth to its absolute max before pivoting at a point into focusing on margins and EBITDA numbers and earnings. And when they turn that dial, have a look at Google, that's when you really see the shareholder value come into focus. That's when they become massively cash flow positive and they can do dividends, they can do share buybacks, they return tons of value back to their investors. So if you decide to invest in a growth company, any growth company, you have to understand that at some point it's a time for growth and at some point it's a time for profits. Tenet Fintech is firmly in the growth phase. And I am fine with them funneling all of their money back into new business ventures, into the North American business hub, if it can give them a return on the investment down the line. I believe in the team, I believe in what they're building, and I think they can make it happen. And we could see numbers a lot like Shopify, where they grow over 5 years, maybe even less, to 1.5 billion in revenues, and eventually margins of 40, 50, 60%. So on June 1st, 2015, the same time period that Shopify was making about the same amount in quarterly revenues at a negative EBITDA as Tenet Fintech, they were at 1.45 billion market cap. 5 years later, when they were making 1.5 billion in revenues, they were a $47 billion market cap. Still negative EBITDA numbers. So how can a company like Shopify have 140 or 1.45 billion market cap when it's basically generating the same numbers that Tenet is now? There's kind of two answers to that, actually. One is they're a company that's operating out of China. The second one is look at the market. Shopify basically grew their business through the largest bull market that has existed in the modern age. There was a lot of access to capital. companies were willing to pay high multiples for growth. You really can't compare the time frames and the areas of operation. The other thing is they're still in the CSE. Shopify was not in the CSE at this time. Shopify was on our exchange. We saw as soon as Tenet got on the NASDAQ last year that's when they had that hyper growth in the share price up to $14 a share Canadian. We need the liquidity of the larger exchanges to drive these same valuations. If we don't get on them, we're still going to be at small cap penny stock valuations at the phase that Tenet is now in its business. So why do I think Tenet Fintech can be the next Shopify? Well, I believe in JJ and Golden. I think that they're going to continue growing revenues, they're going to continue growing margins, and they're going to continue taking all that money, driving it back into the business and innovating and creating another Canadian behemoth company that one day the market is going to know across the world. So thanks for taking time to listen. If you like this video, please subscribe. Please share it with other people that you know that are invested in Tenet Fintech. And let's enjoy the ride together.